Let's proceed with insurance contracts. As mentioned, under IFRS, financial instruments are usually under IFRS 9, and it's limited to the three: debt instruments, equity instruments, and derivatives. So insurance, it has its own accounting standard because the risks attributed to insurance contracts are different, materially different in nature compared to financial instruments. Financial instruments, we deal about credit risk, the risk that the counterparty will fail on its obligation. Market risk, the risk that the value of your financial instrument would fluctuate, resulting into losses because of variability or changes in market factors. Liquidity risk is the risk that either your asset could not be sold or converted into cash immediately, or you could not fund and timely pay off your own liabilities. See, insurance, it's a contract that you issue in exchange for a small amount of money, or for a small amount of money in exchange for accepting the risk being borne by someone else. IFRS 17 will replace IFRS 4. No, it applies to insurance and reinsurance contracts, hindi insurers or reinsurers, kundi insurance contracts. Ibig sabihin, even if a company isn't an insurance company, if they issued inadvertently contracts that would fall under the definition of insurance contracts, IFRS 17 would apply. As mentioned, it replaces IFRS 4 beginning January 2025 in the Philippines. Kasi in other countries, in Malaysia, for example, January 2023, IFRS 17 na sila. Similar to IFRS 9, where the intention is to reflect to the extent possible the economic substance and risk management of financial instruments into its financial reporting. Ganon din si IFRS 17. Instead of being cash flow based or driven, it intends to align on how it is structured, how risk management is being done. Paano ba yung insurance contracts? Paano ba insurance? Sige, let's do a quick crash course in insurance. So, as an individual, we are always exposed to different types of risk. As mentioned on Tuesday, we are exposed to health, risk on our health, risk on our property, risk on our life. And we can always choose to accept those risks without doing anything else. So if we do that, wala kang babayarang insurance premium. So may nag-alok sa'yo ng insurance, sabi mo, no thanks. I'm good, I'm fine. Hindi ako tatamaan ng kidlat na kung hindi ako tatamaan ng kidlat. Okay lang. Eh, ang problema, in the future, knock on wood, tinamaan ka ng kidlat at nasunog ang balat mo, eh wala kang insurance. Luhaan ka kasi wala ka na halos kinikita dahil sa dami ng gastusin mo sa bahay. Ang laki pa bigla ng gastos mo because of medical bills. Assuming hindi covered ng health maintenance organization coverage. Assuming lang. Ganyan ang insurance. Actually, ganyan kayo tinatakot, diba? So, sorry kung may ahente rito. Pero usually, yung tactic nila na, paano kung madids ka? Paano ng pamilya mo? Paano kung yung sasakyan mo biglang bagsak ka ng puno? Magagastos ka bigla. Totoo naman. Ganoon naman talaga. Ang question, how likely? Now, if you don't drive a car, then your risk is virtually zero in terms of car damage. But if you own a vehicle, you always have that risk. Kahit na gaano kaingat ka magmaneho, kung nasa paligid mo, hindi marunong mag-ingat, you will always be exposed to car damage. Example, ako, nakapark na nga yung sasakyan ko. Pagbalik ko, may tama. Bakit? Eh, kasi yung katabi ko sa parking, bangenge mag-park. Bara-bara, hindi ginagamit yung backing sensor. So, nadali niya yung sasakyan ko. Nananahimik yung kotse ko. Nadali niya. So, yun. Ganun ang insurance. Mga ganun instances. You don't expect it to happen, but it may happen. Insurance requires you to make a conscious decision now to pay a premium, a small amount of money, in exchange for someone issuing you a policy. And that policy states that if this insurable event happens in the future, we will compensate you. So if that risk of injury happens, I can use my policy to offset that cash flow. So, medyo tayo. Safe. Hindi man safe, pero mitigated yung financial impact of that insurable event because of my decision now for a small investment that I paid, for a premium that I paid. Assume, knock on wood, nadali yung sasakyan ko, may car insurance yan. Tatawag lang ako sa car insurance company, submit ng requirements. Nung pinagawa ko, sila na nagbayad. I am made whole. So, insurance, the goal there is the insurable event. So, if it results in a loss, then the insurance company will make you whole. Ibabalik sa iyo, i-reverse yung effect ng loss. That's the point of insurance, which is different from a debt instrument, which you want to earn interest, from an equity instrument, which you want to earn dividends or capital gains, from derivatives, which you use for hedging. In effect, insurance is actually hedging, pero we'll differentiate later on. So, an insurance company naman, no, ang intention niya is to collect as much or issue as much policies and collect as much premium. Pero in reality, they will always be absorbing a very high risk compared to the cash flow that they get. Their coverage would always be far higher. Now, in traditional sense, that premium collection, actually they use that to pay for claims, to set aside as reserves for future claims, to pay for operating expenses, and the remaining balance is profit. If you focus on cash flow specific, ganyan siya. Kasi ang assumption ng insurance company, yes, we are covering billions of pesos, but based on probability, only a small portion would become actual claims. And the rest, pag nag-expire yung policy, amin na yung cash flow. Ganun yun. It's a reality. Now, okay yan kung maliit lang yung claims. Diba? Mas lalaki yung profit mo because you have more money, less money rather spent on claims payments. Ang masaklap pag ang laki ng claims ng company. So, ng insurance company. Yun yung masakit. Insurance versus pre-need. Ang insurance tsaka pre-need, pareho. In the sense that may cash out ka sa simula, tas may anticipated cash out kang malaki that you're trying to prepare for. Ganon din sa pre-need. Ang pinagkaiba, uncertain sa insurance based on probability. Si pre-need, definitely kakailangan mo. Pre-need. Need na, sigurado may gastos ka, uunahan mo lang. Yun ang pinagkaiba ng insurance tsaka pre-need. Si insurance, ang tanong dyan, if tsaka when. Ang pre-need, when lang ang tanong. Minsan nga, anticipated mo pa, lalo na pag education plan. Mabibilang mo. Insurance versus HMO or Health Maintenance Organization. Actually, HMO is a form of non-life insurance. Pinagkaiba, ang non-life like vehicle or home insurance. Ang HMO, health mo ang binabantayan. Pag ang sasakyan nabangga, meron kang gastos na babayaran supposedly kung wala kang insurance sa repair shop. Sagot na ng insurance. Tipid ka. HMO, ganun din. Binayaran na yung health insurance coverage mo. Nagkasakit ka. Knock on wood. Unfortunately, na-admit ka sa hospital. Kesa ikaw ang mag-cash out at umutang, sagot na ng HMO mo. Either way, it's both insurance. Non-life insurance. There are 3 models under IFRS 17, General Measurement Model, Variable Fee Approach, and Premium Allocation Approach. Si Premium Allocation, since short-term insurance contracts lang yan, 1 year, such as your auto insurance, lang yan, amortization. Simple amortization. Si Variable Fee relates more kay variable unit link. Yung mga binibenta ng mga ahente ngayon na insurance and investment combination, variable fee approach ang gamit niyan. Yung traditional term or whole life insurance, general measurement model yan. How does general measurement model works? The cash inflow is usually used to offset cash outflow. Ang estimation, ang probability naman, ang insurance company, alam nila malaki ang pinangako nilang insurance coverage. Let's say 1 million for life insurance in exchange for 1,000 pesos or 10,000 pesos rather. Pero ang probability na gagastusin ko yan this year, maliit lang. Kasi you're highly unlikely to go home this early. Pero, sa mata ng insurance company, in the future ko pa yan babayaran, so may time value component pa yan. Liliit pa yung cash outflow ko kasi may discounting effect. May cash inflow na ako ngayon, cash outflow ko sometime in the future pa. The third component, present value mo yung yung effect, net present value effect. May balance ka pa. Yung balance mo, may risk component. Between now and in the future, the mortality rates could change, interest rate levels will change, and all other uncertainties will have a different variable by then. So when you read about IFRS 17, you hear about fulfillment cash flows. Yan yun. Fulfillment meaning ito yung pinangako mo sa insurance policy. Fulfill mo yan. May smaller component, ang term niya contractual service margin, pero yan yung profit margin ng insurance company. Sabihin, nung pinresyo niya yung insurance policy mo, may konting tubo siya dyan. Kasi ang pusta niya, hindi mo gagamitin. Hindi ka magkakasakit. Yung health insurance mo, hindi ka magkakasakit. Pero kung magkasakit ka man, mayroon pa rin sukli. Yun yung contractual service margin nila. So, ganyan, yan ang components ng liability ng insurance companies. Under IFRS 4, cash flow based sila. So, tanggap sila ng pera, lagay sa legal reserves, mag-a-accrue sila ng incurred but not yet reported kasi alam nila meron sa coverage ang eventually magki-claim, hindi lang nila alam kailan, hindi lang alam kung sino, hindi lang nila alam magkano, but they have an estimate. And there are also portion of unearned premium. And then the amount spent to acquire those insurance premiums are deferred acquisition costs. Under IFRS 17, medyo mag-iiba yung balance sheet. Yung kanina pinakita ko, na siya? Risk-based, probability-based. At is the probability of my cash outflow. Meron bang risk adjustment dyan or risk premium? Magkano ang profit margin ko dyan? Yung profit margin, yan yung ina-amortize. At the start or upon issue of the policy, ganyan ang itsura ng balance sheet mo under the general measurement approach. Liability portion pala na. Ito pala nalimutan kong i-emphasize. IFRS 17 focuses on liability of the insurance contract issuer. Kasi yung asset side, IFRS 9 yan. Under IFRS 9 yung asset side. Pero yung liability side, yan yung IFRS 17. On insurance contract issuer. Under day 0, ibig sabihin, sa simula, pag issue mo ng contract, meron kang projected na cash flows na pwede mong bayaran plus contractual service margin. Habang umaandar yung policy, may portion dyan na natitirang coverage. Let's say, for example, 5 years yung insurance, 4 years to go. Meron dyan actual incurred claim ka na. Nahahati mo na yung insurance coverage mo between future insurance claims and future insurance claims na alam mo, highly likely na incur mo na. So, makakapagtabi ka na ng pera. Ito, magsisimula ka ng magtabi ng pera, ito, magdadasal ka, sana hindi maglabas ka ng pera. At the end of the coverage, what will be left behind would be your incurred claims. Kasi kapag tapos na yung insurance contract mo, hanggang doon na lang ang pwede mong ipangako dun sa beneficiary or insured, you only pay for what is accrued and incurred as far as your commitments are concerned.